Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay, so the vol is back. We had the second high of the double top on the front month contract going back to September 2018 at 29.61. We talked yesterday about how 3 of the last 4 days have wanted to turn the 9-day into resistance. You saw that range expand to the downside yesterday. They've engaged the lower Bollinger Band both yesterday and today. So by letter of the law, we are in a lower band ride. So I'll be very interested to see how much mileage they can get out of this. But as far as the actual price action in Globex, it's typical lower band ride action. You had a move up to 95, almost to 2,900, test and reject, go down and reach that band. So you see what happened yesterday. We had the lower high. Basically, it was a trend down day. They rejected it for the last, call it 345. They launched at about 30 handles. So massive short covering there. Walked it back into 2,900 and then back here. So far it's a higher low versus here. You got a lot of lower highs. If the bears are going to progress, they got to take out this low at 28.62. So look, it was a hell of a day in the room yesterday. A 60, not quite 65 handle day, and I missed the whole short covering rally because I had an appointment. I had somewhere to be. So just a huge day. As far as the open is concerned, you got the hourly mid band at 85, 85/86. Volume weighted average price is 83. But here's the other thing, and I was saying this in the room yesterday. You got a massive headline market here. They're going to throw tweets and things at this tape that are going to try to make it pop. And then, then the issue is, can the bears overcome that? And, what does the tape want to do? In massive headline markets, which I call headline minefield markets, I coined that term many years ago. Take your profits where you find them. You got to have a stop on everything. In the room, we use a 5-handle disaster stop. So there's nothing worse to us that's going to happen than 5 handles. And it's because you just don't know. Okay? So anybody this morning who's was short, 74, 76 or whatever that lower pop was, when that tweet hit at about 850, 849, well, we went from 70 and change all the way up to 85. You don't want to get caught in a situation like that. One trade like that will unwind all of the hard work that you've done over the period of, however many sessions. Use disaster stops, hard stops, respect risk, and take profits where you find them. And then whatever happens. Look, in volatile markets, you are going to take, you're going to get hit every once in a while. Yesterday morning, we took a -5. 64 2/3 handles later, I could care less that we took a -5 because we didn't let that -5 become a -25. So that was a long early in the morning and it wasn't working. So what do? Take the disaster stop, get short, and we're short the rest of the day. What a lot of traders do in those situations is, I'll fight price all day. And that's how you end up down 65 handles by the end of the day if you're lucky. So respect risk, use stops, understand the environment that you're in, and you can take advantage of the volatility there that is presenting itself right now. All right, everybody have a fantastic day. There'll be more stuff out on social. Come check us out. We would love to meet you. Come trade this stuff with us. Take care. Trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook. And join us for a free trial at www.princetontrader.com. Trade them well.